On Tuesday, stocks way down for the day. The S&P 500 down 3.24%. The NASDAQ 100 down 3.84%. We see bonds up quite nicely, 1.67%. Gold up 0.61%. Remember, markets are closed on Wednesday for President Bush's funeral. Things will open back up again on Thursday. Let's jump into these charts. Now, if you recall, the market was up big time on Monday, but pared that back quite significantly on Tuesday. The derivative oscillator is continuing to lose upward momentum. That price percent oscillator now has kinked over back down. So again, is the new normal going to be down? We shall see. That's where the weekly chart is. What do we see on the 2-day? Well, of course, the 2-day crossed over on the 28th. The 2-day candle ending the 28th. Went up even further, 2-day candle on the 30th. And of course, for Monday and Tuesday, the 2-day candle ending the 4th of December is also up. Now, again, it's just a little bit above, closed just a little bit above that prior candle. That's showing the real burn off. Now, this is the Heikin-Ashi candlesticks. Those you want to know more about those, it means average pace in Japanese. Kind of candles we use. It's not what you're used to. If you're used to candlesticks, the average type of the high open, low close, this is measured differently and it helps us track average change of price. Well, it's called the average pace. So we'll continue to use those and got great training at the website. Want you to get an understanding of how they work. We still see the derivative oscillator going up a little bit. Price percent oscillator is flat on that 2-day chart. Wow, you can really see what happened on Tuesday. Morning started off with a doji, lots of indecision tending down in the afternoon. A slam down blowing through the 2-day trend line started in the morning and really in the afternoon. And the price percent oscillator heading down and the derivative oscillator dropping off precipitously. So again, keep your eye on things. We don't have a trade, of course, until that 2-day chart rotates back over going down. But the market did absorb the news in China in a different way than folks would have guessed. That's why we follow the charts, not the news, my friends. We don't do news plays. We look at long-term trends and we follow them. Okay, what's going on the Qs? Of course, we said slam down also even more than the S&P 500 by 0.5%. We see also a wick on top, a smaller candle. We see the derivative oscillator continuing to lose downward momentum, but that price percent oscillator now moving down again. Remember, it's just the second day of a typical 5-day candle. Like we said, markets will be closed on Wednesday for President Bush's funeral. We see also, looks very similar to the S&P 500 is where the latest 2-day candle is. Price movement is, of course, again, we've got up moves. And for some reason, remember, bottom down, top up, and we need to bottom up, top down. So we need to make sure we adjust that 2-day candle going the right way, the 2-day trend line. And of course, we do see price movement above the 2-day, and we have a bit of we do have a divergence. The weekly chart's going down, 2-day chart is going up, even with that huge pullback. We see the derivative oscillator again gaining some momentum. Price percent oscillator heading up. 4-hour chart looks quite similar to the S&P 500. Indecision in the morning, slam down in the afternoon. Don't have a crossover yet, but does appear to be heading that way on the 4-hour chart. So we'll continue to keep our eye on things. Don't have a trade on the S&P or the Qs until, again, both the 2-day and the weekly chart moving in the same direction, and that 4-hour chart backs up and gives us a jumping in point. Want to know more about how we do that? Buy our book. You can find the links you need to purchase the book in the show notes that come with every program. If you're not signed up and aren't receiving our subscription that we send out every day, we send out an email to all of our subscribers, and go to chartingwealth.com and sign up for free. Also has the links on how to buy the book. So we go from stocks into bonds. Now, what's going on with bonds? Bonds are in a confirmed up move on the weekly. Remember, that crossover happened quite nicely on Friday. Ended the week with a weekly vertical crossover on the 30th. And of course, things have done what typically happens in weekly vertical crossovers. They've continued to move in that direction. See the derivative oscillator gaining upward momentum, price percent oscillator heading up. We have a nice green candle We go from the weekly to the 2-day. What do we see there? Derivative oscillators gained a little bit of momentum. Price percent oscillator spiked over going up. And we see a nice 2-day green up candle, just like we would have suspected. We go to that 4-hour chart. What do we see? Well, of course, we see things continuing to move up. You know, you could have had a jumping in point late in the day if you wanted, or even in the afternoon, depending on how you read either the 2-day chart, the 4-hour chart, or you read the 30-minute chart if you were going with one of the methods we have for jumping in after a weekly vertical crossover. And of course, we see things continuing to track up, take up, move up. Nice strong up movement in the morning and the afternoon on the 4-hour chart as bonds continue to move in the direction predicted by the weekly vertical crossover. Now we go back to the weekly chart, and we take a look at gold, which was up 0.61%. Remember, gold's in a confirmed up move on the weekly chart all the way back to that weekly vertical crossover on October the 5th, the week ending then. Went up for 3 weeks, then sort of sideways and down for 3 weeks, sliding sideways for the following 2 weeks, and really starting to go up over the course of this current week. Derivative oscillators about flat. Price percent oscillator is heading up. 2-day chart shows us a crossover with this latest. So now we actually have a confirmed crossover going up. We were predicting that yesterday, but had to see. We don't call it until the candle closes. Remember, that's extremely important. We're going to change our arrow over to a confirmed up move. And we see the derivative oscillator turn green, price percent oscillator heading up. We go to that 4-hour chart. What do we see there? Well, of course, 4-hour crossover going up back on the morning of Thursday the 29th. And we saw strong up movement in the morning. On Tuesday, a bit of a pullback in the afternoon, but again, up 0.61% for the day. Now that the 2-day chart's in a confirmed up move going up, after we have a potential pull, after we have a pullback in the 4-hour, if it crosses back over going up, it could give us a jumping in point in gold. That's where we are, folks, as we end the day on Tuesday. Remember, markets closed on Wednesday, and we'll be back with you on Thursday for the market review after the markets close on Thursday. Again, a shortened week for President Bush's funeral. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.